I think the equity market is really largely ignoring it. One, because it's starting to get conditioned to a lot of this purple haze of policy uncertainty. But two, because I think the bottom line is rate cuts are more likely than not, regardless of what ultimately happens with Cook. And I think that is the most important thing for the equity market's path forward.
So the equity markets, do they hinge around Mag 7 and NVIDIA performance, or do you see a legitimate rotation at PNC Bank?
Well, it's hard to bet against the Mag 7, and certainly it is NVIDIA earnings day, so everybody's focused on, how strong results are likely to be. But we actually have seen expanding market breadth over the course of the summer, and a lot of it's been fueled by how strong Q2 earnings season actually was. It wasn't just about the top 7 or the top 10 names. And when we look at revisions for Q3 and even in the balance of the year, we're seeing that breadth story take hold. So I think that's a really important fundamental and healthy aspect of the market rally, even as it stalled out here into the end of the summer a little bit. But given where valuations are, it's healthy. We're not hanging our hat on just one name, even though today is a big day for sure.
So today is a big day, Amanda, as you mentioned, NVIDIA, but talk to us about just earnings in general. The second quarter earnings came in much better than expected, I think. And the question is for a lot of folks, is that enough to continue to push this market higher? How do you think about earnings?
Well, Q2, there's no question Q2 results were a monster relative to where we started. Now, the bar had been set pretty low because everybody was freaked out, technical term for you, as it relates to the impact from tariffs and trade potentially hitting in Q2. Of course, it didn't hit squarely in Q2. We punted it a little bit into Q3. So the results came in, I think, even much better than a very low bar that was set. And I think the results continue to suggest that there's still a lot of fundamental strength here. We're not seeing a lot of weakening. Q3 is really what's important in terms of the rally, and revisions have been creeping quite a bit higher.
Bloomberg working 24/7 on the Fed Trump uproar. Just 3 headlines here. Claudia Sam publishing, Federal Reserve shouldn't take the political bait. John Authors, who's been absolutely brilliant, firing Lisa Cook won't be enough for what Trump wants. And Jonathan Levin, Powell won't save the Fed with silence. Amanda Agati, here's Bill Dudley, economist, saying markets are too complacent. Even if Trump stands only a small chance of taking control of the Fed, the effort itself is disruptive. So how do you change an equity strategy for our listeners and viewers? Whatever the outcome, there's going to be disruption at the Fed, right?
It does seem as if there's going to be a lot of noise at the Fed. There's no question about that. I think at the end of the day, though, the forward guidance and the dot plot and the path is really what's going to matter the most. So is it 25 basis points? Is it 50? Is it ultimately 100? A series of cuts into next year.
Is PNC modeling a Besant-like 4 rate cuts?
We are looking at potentially 100 basis points worth of cuts, but not all into the end of this year. It spills over into early 26. But so if that's the path, then we're not pulling the ripcord and raising a ton of cash and moving to the sidelines. That will create a decent amount of support for the market here, and certainly for the earnings and economic backdrop. So we're tweaking positioning. So we've been talking about quality as being a really important place to be for investors all year. Quality is getting pretty fairly valued or fully valued here. So we are tweaking at the margin, but we're not feeling particularly, negative or bearish kind of going into the end of the year if the Fed is going to continue to be accommodative.